All right. Good morning, everybody. Hope you're having yourselves a fantastic start to the AM. Hopefully, no technical issues here this morning. I mean, my YouTube looks okay. My OBS looks okay. All right. So, yeah, hope you guys are doing well. Happy Tuesday. Good morning. Good morning, Suresh, James, Michelle, Salstein, Topher, Gary, Steven, Ruben, Samuel, Nate, Joe, and Craig. A couple things I want to talk about here this morning, right before we get going, and just kind of update you guys on a couple things, or basically just a couple expectations, right, over how things I want to be working. In general. Like I said, I've been putting together that Trade Like a Pro framework, right? How to plan, review, and optimize your trading decisions. You probably would have seen an email that went out to my general list here this morning. As a member, right? Obviously, you can already access that, etc., etc. What I've added in there is basically the idea is that if you want to take different trades, if you want to take different setup triggers, if you want to take different ideas to me, right? You're not happy with the amount of trades that I'm taking. You think that I take different quality of setups than you want to take. You want to be more aggressive. You want to be more conservative. You want to swing trade. You want to do whatever. The idea is that you can use that framework to still trade the DTR style and stay well within sort of the frameworks that I think are continually successful. So the idea here is that the Pro framework is going to replace some of the terms of the conditional guarantee, as I think that this is a more robust and better system essentially for us to, basically get the progress that we want in our trading. So the idea here fundamentally, right, more than anything else, more than any trades that I show or take or do anything on a day-to-day basis, right? It's all about basically doing three things. Can you plan out your stop loss, right, before your entry price? Can you get an appropriate risk-reward ratio, right, when you do take an entry? And can you scale out your positions as your P&L is increasing? If you honestly do those three things on a consistent basis, then it really doesn't matter what your setup trigger is, right? If it's different than mine, if it's different than Warren Buffett's, if it's different than literally any other traders, it is those core frameworks that I think are fundamentally what makes people successful. So what my objective here, right, as an educator, as a trader, isn't to make you guys money, right? I'm not here to fish for you guys and to spoon feed you with capital. Because if it was that easy, right, then fundamentally I'd be able to charge a lot more for my services, and there'd be easier ways for us to basically accomplish that. So if you guys do want to be consistently profitable, if you actually want to make the most out of this opportunity, if you actually want to take the funding that you're getting access to and some of that extra leverage, then please think about implementing a lot of those frameworks into your trading decisions, as I think that's the only way that you're going to be consistently successful. So once you're actually fundamentally, right, planning out all your trades yourself, once you're boxing in all your entries, once you're doing all those techniques and you can understand why, then you stand a chance, right, of becoming consistently profitable. So that has to be sort of the obsession, I think, on a day-to-day basis. And it's my job to basically help empower you to accomplish those objectives as quickly as possible, right? I want to stress over and over and over again that trading is a very fundamentally difficult game, and it's difficult because it is very challenging to do the boring basics on a day-to-day basis, right? For us to replicate those sort of key techniques is incredibly challenging at times because we constantly get in our own way. So if we can build up those good habits and we can learn how to plan out all our trades and create a margin of error for ourselves, then you're going to find that your trading goes a lot better. So if you wanted to take a trade there yesterday and you're disappointed that I didn't take one, do something about it, right? And the way that you do something about it is by trading the responsible way, right? So pick and set a hard stop loss, right? Determine your entry price and then work backwards to find your risk reward ratios that give you the margin of error that you need to be successful, right? I try to stress this on a day-to-day basis. Everything I do inside this stream is a reflection over what I think is best for my account, my personal situation, right? And sort of my trading personality. So if you don't think that those elements sync up exactly with how you want to behave, no worries. I'm not taking it personally. I don't think that you should want to try to copy me specifically, right? Because my strengths and weaknesses are different than your strengths and weaknesses. But if you take some of those core fundamentals, right, and you apply it to your trading, then I do think that you're going to see a lot more success in your decisions. And that has to be the responsibility, right, that we take on a day-to-day basis. So it is that level of accountability. It is that pro framework, right, the planning, the reviewing, and the optimizing of our decisions on a day-to-day basis that will put us over the edge and help us keep our edge sharp over the course of a career, right? One trade is nice, 1 week of gains is nice, but it's the repeatable, consistent execution that separates, right, the winners from the losers. And ultimately, that's what this game is all about. So, yeah, with that being said, right, with that kind of out of the way, let's start mapping things out here, figure out what we want to do, and kind of get after it. Obviously, right, we've got, I think, still a little bit of a quieter expectation here today as we creep up towards tomorrow's FOMC, right? So May 1st FOMC decision. Generally, markets, we're not getting a ton of volatility here so far prior to that Fed event. So would like to see some enthusiasm show up in the market here. If I were to do counts for this, what's the count? And then what would be the volume standard here that we'd like to see to be convinced that we've got trending PA? Yeah, spot on. 1 for 3 here to the upside. The last, we'll say Monday, Tuesday, or Monday, Friday, Thursday, right? Not exactly fantastic looking days of price action, even Wednesday, right? All pretty gross days here. So I don't think I have evidence that I need to be very aggressive yet until I see a certain level of enthusiasm show up. So what would that level be? Or what would be maybe the logical spot that we'd want to see volume show up for? Any thoughts, guys? Any thoughts? So when was the last time we saw increasing volume? When was the last day we saw increasing volume? Right? So Thursday. So since Thursday, right, we've seen momentum pretty much disappear on Friday, Monday, and then so far here today. So it's not that we need to see bigger volume than what we saw on Thursday. We want to see bigger volume than what's been stuck since Thursday, right? So if the volume standard here has been that we haven't really been able to consistently push higher here or push above because of that weak volume there on Friday onwards, that Friday standard would be what I would like to overcome. So if I've got a evidence, right, of a rejection there on Friday, I want to overcome that rejection standard to essentially think that I've got conviction higher. Right? How do we feel about being bearish here? So I know I wrote out a bearish plan. I mapped out those levels. Anything to be concerned about? 1, 2, 3, 4, 5, 6, 7. Right, only one day in the last week, right, where we've had a lower high. A lower low. So maybe a little bit more bullish than bearish, albeit not a huge indication of strength, right? So I guess in theory, I could be looking for rejections lower, but my bias would still be more towards playing things to the upside, especially with the VIX hanging out here still right around that 15 handle. So if we get back into the 14 range, pretty challenging for me to think that I should be, I don't know, like aggressively bearish, right? I have very limited evidence that that price action actually pays me out here long term. So if it tends to stay in those kind of, call it relaxed areas, then I'm going to be a little bit, it's easy for me then to argue, right, that the price action is waiting for tomorrow's FOMC. So if I don't see an increase in volatility, if I don't see an increase in volume, then I'm basically saying that, hey, this is a sidelines market waiting for tomorrow's Fed speak. And that wouldn't be unexpected, right? That would be fine. But would need to see, yeah, I basically need to be convinced here today that the price action is going to be worth the effort. Okay, QQQ, 1 for 3 here. Again, higher highs. Probably need to get above 435 still, right? Not really changing. Hey, Michael, you might be a little bit behind here on your stream, man. Check to see if your YouTube button, or when you click the YouTube link, it should be like a little red dot beside it. I think you might be a couple minutes behind. All right, Apple, 173.31. Big gap to fill here. Possible little rejection. 1, 2, 3 now, right? 3 points of contact on this trend line, give or take. Going into earnings Thursday, so 2 days away. I reckon it tries to fill this gap and then goes from there. But not a great looking candle shape. Good volume profile. And then a nothing gap. So this is like a, I mean, it's a 2 out of 3 here in theory, but it's a weak 2 out of 3. All right, it's a weak because the candle shape's not great. So you'd be looking in theory for a breakout either above or a dip buy. Yeah, no worries, man. I figured. And then, I mean, you could, I think you'd probably want to go gap fill and then play the, once the gap fill has happened, right, to run it back up towards. So gap fill and go pretty much. Okay. Cool. Tesla, yesterday's lunatic is today's gap down. But this is a textbook 2 out of 3 here, right? High vol breakout yesterday on news. Now gapping down a little bit, but gapping down into an area where you've seen dip buyers and bulls step in before. Now, the size of that gap here might be a little bit challenging, essentially, right? Because now we're, I don't know, 20 bucks, give or take, right, from that sort of previous high. So I do want to be a little bit patient here. Basically, if we can get like a fake out first, basically a bearish failure before a bullish breakout or bullish breakthrough. But you would anticipate bulls stepping in and trying to defend these lows here at some point. So if you can do that on a consistent volume profile, that would be the narrative, and then basically targeting then that 200 zone. Right? 2 out of 3 with volume means I don't have a bearish scenario here. So, cool. And then to the downside here, right? No real scenario that I am interested in. Right? And it's the volume profile that's telling me I shouldn't be bearish, right? If I'm going to invalidate yesterday's price action, I need to either make and hold lower lows on the daily time frame, right? Or overcome that volume standard. I think it's very unlikely that well, I'm not going to close and hold under those lower lows on a daily here this morning. So for me to get a volume bar that's more impressive than what I saw yesterday, I think it's just a very low probability event, right? So no interest there in that downside scenario. I'm being told that bulls are in control, so I'd rather not fight that story. Here, right, I can be a little bit more flexible in breakdowns because I have less evidence, right, on the index of bulls really defending these lows or this like 5100 zone and under with a very impressive volume standard. The only really impressive volume bar is a very indecisive candle. So we know that, once we break down through that area, we're not expecting a necessary dip buy. We're more expecting that to be a point of interest, right? So it gives us a little bit more flexibility over how we can essentially look to take advantage of this PA. And if we're going to zoom out contextually, it's hard to not think of this as kind of a bit of a flag after a trend line breakdown, right? And then if we look at that flagpole, trying to do is duplicate it, right? If we then look at that flagpole, it takes you then to that next point of contact, right? Or that next sort of pseudo shelf, right, on that trend line. So from like a price action perspective or from like a technical pattern perspective, I do think we've got some reasons to, be a little bit skeptical of the PA, but would anticipate seeing, just needing good consistent follow through across the board. And I'm not sure if we're seeing that on the internals here yet. So that personality shift that we'd like to see to occur would potentially happen right within FOMC tomorrow. And that could be the catalyst to help then push that next leg lower. Microsoft, right, continues to look a little bit gross. 2 out of 3 here to the downside, but a weak 2 out of 3 without volume. So you'd either be looking for a high vol dip buy inside Thursday's range, or you'd be looking to invalidate Thursday's volume profile on a breakdown lower. This is the candle, right, that is giving us the, call it trending PA indication, right? We've done nothing to really invalidate this standard that we created on Thursday. So we'd anticipate bulls to either defend there, right, or for them to fail inside that zone. Ideally, right, the defense is probably the better setup as you then have a path towards sort of like that 410 barrier and beyond. But certainly seems like we could have some stories there that could be interesting. So 2 out of 3, right, without volume. So it means we've got an indication of trending price action, but not very strong indications of trending PA. So we'd like to see that strength step back up. If you're bearish, that standard becomes a lot more challenging as you have to overcome Thursday's standard. If you're bullish, right, that's a lot easier as you just have to overcome yesterday's standard. Make sense? Okay, Amazon, higher high, higher low, increasing volume, red candle, gap up, and earnings here today post-close. This is a cluster of information, and I'm willing to ignore pretty much all of it, right? With earnings post-market or post-close here today, no interest chasing this. I'll let this sort itself out, and then you can look to play the gap up or gap down tomorrow. Okay, AMD, again, earnings today here after close. Looks like it wants to break out. Maybe the risk reward here is for a move higher on these earnings. But again, I'm not interested in this. Not enough volume for me to signify a breakout from this range. So if we were to argue that this is a trend line breakout, we could also argue that this is consolidating here as like a bear flag. So you can play this in either direction. Earnings will be the catalyst here to push a direction. And let's see if that happens for me. But a little bit of a downtrend here for the last month or so, I guess, right? Month and a half, 2 months. So would think that the risk reward is probably more to the upside. Okay, NVIDIA inside bar here, decreasing volume, gap down. So you're now looking for a high vol breakout, right, above 882 for continuation up above, right, towards that next point of contact on that trend line. And then from there, you can really start to push. Hey, SG, how you doing? So yeah, above Friday's highs. No trend line retest with that consolidation. So inside bar means you're looking for a breakout trade. And then the volume standard here, you don't need bigger than Friday, you need bigger than Monday. Okay, Meta, little gap down, 2 out of 3 here to the downside. Again, similar story to what we had on Microsoft. Hey, Rusty, where you could maybe look for dip buys inside the post-earnings move. Right, so if you could find support inside that range, that would be more the narrative I would be interested in. Otherwise, we need to break down under that like 414 area to start to actually push this thing lower. Netflix, double inside bar here, so looking for a consolidation breakout at some point. That some point doesn't seem to be here yet this morning, so let's see if we can get it. Hey, Chuma, how you doing? Hey, Dwayne, how you doing? Google mega gap down here still. I'm going to stay away from this. No interest. And Bitcoin's been stuck for a while here now. So yeah, team, in general, right, we know that we're waiting for non-consolidation price action, and we're potentially expecting consolidation because of tomorrow's FOMC. So the market's not been showing us a lot of enthusiastic participants, right? As we can see, we've got a shocking amount of volume there yesterday, and that tells us that we could be waiting for something. So what that something could be, right, would be that interest rate decision that could be showing up there tomorrow. Let's see if that's actually the reality or if it does come together. If I do take a trade here today, it's going to require a significant volume standard or something to meet my confirmation technique, right? If I don't get that, no worries. Not going to be the end of the world. I'll be happy to sit on hands. Like I said at the start of this call, right? My objective here, guys, is to help empower you to be the best traders that you can be. Not to basically spoon feed you. That's not really sustainable here long term. So if you're not happy with the amount of trades that I'm taking, sweet, right? Do something about it. The way that you can do that and still sort of behave like a responsible trader is to trade within the pro framework, right? So that's sort of the new concept that I'm trying to introduce here a little bit more. It's the plan, review, and optimize your trading decisions by boxing in your trades, right? Journaling your outcomes and then reviewing your data on a day-to-day basis. If you do that, then honestly, you don't need, like, you can ignore the volume standards. You can ignore my setup triggers. You can ignore the pre-market conditions. You can do all these sort of things because eventually you're going to find yourself an edge that you can execute. If you want to speed up those processes, then yeah, right? Take my techniques, take the things that I focus on a day-to-day basis and use that to apply it to your own personality so that you can become consistently profitable sooner. But the core concepts, right, are find your stop loss, pick your profit target, and then work backwards to find your ideal entry price by targeting a 1 to 4 risk reward or better. If you can consistently do that and you're allowing your trades to play out and to give you the follow through that you need and you're scaling out as your P&L is increasing, then you're going to put yourself in a situation where your edge is going to be pretty darn good. You're not going to have too many issues and you're going to be in control of all your trading decisions. So fundamentally, right, if you want to become a really good trader, you want to have confidence in kind of your decision-making process, then you have to understand why you're picking your stop loss location, why you're picking your profit targets, why you're picking your entry price, and having confidence in that technique. So hopefully that pro framework will help you guys create that. Inside that planning chapter, there's we'll call it a step, I call it step 4, boxing in your trades. That will break down that technique in a little bit more detail. There's been videos about that in the Discord here previously. But I think fundamentally, right, that's the way I want you guys thinking. So you don't have to trade the opening range breakout. You don't have to trade ES futures. You don't have to do really any of those things here with me. But if you follow those core concepts, if you follow basically those techniques, then you're going to take the, call it like common characteristics, right, of profitable trades and apply them to your own technique. That's basically what you're trying to do. Because there isn't one perfect setup trigger. There isn't one perfect, entry technique. There isn't one perfect trail, like stop loss technique. There isn't one scale out technique that's perfect. There's nothing that solves for 100%. And everything has its own unique pros and cons. And how you react to those pros and cons is also going to be very unique to you. And so what I try to do on a day-to-day stream or day-to-day basis, I don't know what that means, Malik. What I do on a day-to-day basis, right, is executing things that I think set me up to protect myself from my biggest weaknesses and protect myself or help me execute, right, my biggest strengths. So on a day-to-day basis, I'm trying to always do what is best for me, right? And I'm being pretty selfish within that context. But if you guys want to be selfish for yourselves too, right? You want to do what you think is best for you, then follow that framework and you're going to find yourself a lot of success, because those are the common characteristics of what make traders successful, right? It is the deliberate decision-making processes and the sort of standards that you're looking for that will create the repeatable technique that you want. So I would really emphasize that. I can't stress that enough. I think that's really the biggest differentiator between the traders that do well and the traders that don't, is the traders that do well are the ones that kind of have their own unique plans and are putting themselves in situations where it's easy to be successful. Rusty, to put you on blast here a little bit, hopefully you don't mind, but when Rusty joined the room, he was one of the first members that almost like immediately found success. And Rusty found success trading with us, even trading options with us, because he had his own independent plan on how he was going to be taking profits. So what he did for a very long period of time was basically every time he was up 10% in an options contract, he just took the trade, took the win. And so while others would be waiting for 20%, he just took it, stacked up his base hits, and built up that foundation so that he could have the confidence to start taking longer and longer hold times and could start optimizing his technique to be more and more impressive. So it was just having confidence in doing his own thing, right, and knowing why he was doing it that gave him the basic data point, right, and the conviction to, basically go from there. And that, I think, is what, I keep stressing this, right, is what makes traders more successful than others, is that they have a specific plan. They know what they're going to be doing before they're taking a trade. They've planned out their trade. They've boxed in their decisions. They understand that technique, and they're setting themselves up for success by tracking that data. So I need to emphasize that a lot, right, guys? Because these are the basics. These are the fundamentals. These are the things that we need to be obsessing over on a day-to-day basis. And these are the things that you should be taking from my trading and applying to yours. So yeah, you want to take my trades? Awesome. But you also, I want to be in a situation where if I take some time off, or I don't know, if I got sick or something, right? You guys need to be able to have the skills to be able to still make money in the market. And the only way that that's going to occur is if you take accountability for that, boxing in, right? Or for that plan that you make. And the more accountability you take for that process, generally the better your trading is going to go. Malik, what do you mean by Friday? I don't know what that means, man. What do you mean? Guys, any questions about this morning's plan? Any questions, guys? Any questions? No worries, man. No worries. Hey, Antonin, how you doing? So not bigger volume than what we saw at yesterday's open, right? So for us to have a bear case, not really going to be in play. Right, if we're not seeing enthusiasm greater than what we saw at open, then we can't argue that we're doing anything else besides consolidating, right? I can't argue that I've got increasing momentum if the volume is less. Basically, the idea is we don't want to show up to a party when they're turning down the music when we get there, right? We want to see the music being turned up, you know, people pouring shots, like all this kind of stuff as you show up, not like the cops breaking it up. So that's why we need that volume standard, right? We need to see that enthusiasm. We need to see that certain element, right, of joy in the markets. And then we can have some fun. So we didn't get on the 3-min. Maybe we can get the volume standard here on the 5. But if I don't get that right, then I'm going to be pretty patient here. I don't really drink anymore, but every now and then. So, how do you feel about the opening range? 6.5 or 6.25 points. I wonder if I can actually change this here. So not bigger, right? Yeah, and we know that if it's a 6.5 point range, that the half-life of that, right, is less than 4 points. So if I do get a setup trigger here on the 5-minute time frame, my entry to the long side, right, would be 51.3375, and my entry here to the short side would be under 51, or would be 51.2725. What I want to do here is actually change this stop loss size to be a better indication of what this actually means. Because right now, this is actually probably a better translation for what that means. Should be range size, not stop loss size. If I want to call it a stop loss size or stop loss in points, I might be able to actually even turn this into the stop loss price as just like the midline. Let me see if I can do that quick. Yeah, we've got the FOMC decision tomorrow as well, right? Which I think is what the market is more waiting for. Because we didn't get a huge reaction to Microsoft earnings. We didn't get a huge reaction to like Meta when it gapped down and all this kind of stuff. So I'm not sure if it's individually waiting for any specific names at this point. I feel like the market's maybe more waiting for yeah, the Fed decision, for the Fed speak to get out of the way. Yeah, consumer confidence ish important. So we'll see if we can get maybe some volume from that. That could be an opportunity for that volume catalyst. But if we look at this on a shorter time frame, right, or on a shorter volume profile, or yeah, shorter time frame, I don't know if we're really seeing too much indication of a non-chop day here yet. Guys, what else? I keep asking for feedback here because I want to know how to make this pro framework basically give you all the information that you want. So what else could I include inside those chapters that would give you the information that you're looking for? So how else can I make sure that that's like an unbelievable resource for everyone? What is missing? All right, yeah, please let me know. like I want to just make sure that there are no surprises, right, in what my process is. So, like, I hope that there aren't. But I keep getting some questions about, like, if I'm doing things that I'm not showing or something along those lines. I just want to make... I appreciate you saying that, Chama. Okay, guys, the only way that I learned was because, yeah, I dealt with someone who was not always in the best mood dealing with me, but he was very transparent, right? And he was very upfront and honest, and you know, it was his job to be that individual. So that's my goal, right? My goal is to kind of pay it forward in that context. But it is very important to me that you guys are independent thinkers, right? Like, my goal here is to teach you how to fish, right? By showing you how I throw my net, right? How I set up my bait, doing all those things. But I can't be the person fishing for you ultimately, right? So that is why I'm so obsessive about these sort of things. It's very important to me. Okay, so I'm trying to get this stop loss label showing up here. Might take a little bit. Potentially, right, we could look for, if we can get increasing volume here on this candle, this could potentially be a setup trigger here for us on the 5. Not the best volume standard here still, right? I don't know if we're really bigger than that Friday. So that would be probably the reason to maybe sit and wait, right? But if you're looking for that breakout, confirmation, right, of a breakout is a separation outside of the range. So we just draw this manually here. You know what? Maybe I'm, has to be maybe more on the 3. See if this works. Man, this thing's complicated. All right, so you need to see a pretty big pullback here, right? I don't know if that's going to happen. Kind of, right? Not perfect. Missing out a lot of the stuff, though. Okay, so not quite what I wanted to see there. So it means that my target, right, would be 12 points away. So if I were to box in this trade, right, that's approximately my profit target. No, we're not in a trade here yet. Not in a trade here yet. I'll let you know when I do something. As always in the Discord, right? I'm gonna update inside the setup alerts channel, right? When I'm looking at something and when I'm looking for an entry, right? So I'll say that way before I ever get into a play. I won't be taking stuff without including it in there. So then stop loss, right, logically probably needs to be about this 939 candle low. Yeah, Malik, you just randomly typed out Friday at some point, and I had no idea what you were referencing. So to get that 4-to-1 here, right, would be about this. I mean, the volume now would cancel this out for me, right? I would say, like the increasing volume standard, right? That would be the reason to not jump in here. Right, so this would be what I wouldn't want to see, right? Because that tells me strong bears, not necessarily strong bulls. I think what I've seen a lot on this opening range is that you can get kind of like an initial breakout that will go halfway, pull back, and then it'll still go. So I'm trying to be a little bit flexible with it, but I should never see increasing bearish volume. I think that should be I think it's also kind of a relative thing. I'm not sure if the higher higher specifically would invalidate it, right? But I also want to a certain extent, visualize how much of the breakout has already occurred, right? I would think that would be more the bigger element. So if it, like, you know, we did more than a 1 hour move off of that range, so maybe that's a little bit extended. What makes you think go short? We were just mapping out what a 4-to-1 risk-reward ratio would look like, right, using the Fibonacci technique instead of, just because I'm playing around with the code of the opening range. So as you can see, right, I don't have that green box. So it just helps me visualize that same concept. Guys, don't overthink things, right? Don't overthink things. Like I said, right, if I'm going to be taking a trade, I'll be very transparent over what that stop loss is going to be, what that entry price is going to be, etc. You won't have to be trying to plug in those gaps, right? Yeah, so if I'm risking $1, my target should be $4 away, right? If I'm risking 4 points, I should be making 16 points on the upside, or I should have expected 16 points to follow through. Right? So R equals risk. Chuma, I don't, guys, you got to listen, right? I have just been saying that I am trying to add a code change, which is why we have done it manually here, right? Why this red line is here, why that red line is here, and why that red line is there. I am making an addition to the code to help us visualize our stop loss better, and it's going to take me a little bit of time to do that. So please be patient and please listen. So no entry here, guys, right? I am not interested in this. Right? And the reason I am not interested in this, because this opening 5-man volume is not greater than the Friday standard that we determined we needed to see to trust a breakout, right? So we created rules for ourselves. It did not satisfy those conditions. I maybe have an expectation that at the 10 a.m. time frame with that data dropping, I could establish then that volume standard. But I don't have that in play here, so no interest in a trade. Really hard to be bearish with the VIX where it's at. Can't really see any logical reason for it. Like if you want to see the opening range, it's here, but I'm trying to change this so that it looks a little bit better, right? So please, guys, you gotta listen. Drives me fucking insane. Okay, so data about to drop in a minute, right? Let's see if we can get a high volume reaction here. No, not at all. I basically, well, when I was trading stocks, right, I had you can basically copy trade across interactive brokers, basically a setup like that. You can do that. So that would be the way I did it, right? I'd have a master account and then an account linked to both of my sisters, where if they then took money out, right, they would be liable for those taxes. So it was more set up that way. It was day trading. I wasn't like just running a rolling equity-based portfolio or doing anything that was different than what I'm doing here on a day-to-day basis. Right, it was okay through interactive brokers, right? You can basically set up like a financial advisor account type thing where it'll copy across. My personal long-term strategy is really basic. It's buy as much as I can afford to buy every month, and every time it sells off 2 to 5% in a week. And I'm just buying indexes with a buy and hold mentality. On those dip buys where I'm buying that discount, so if I buy a 2% sell off, then I tend to sell it once I have, or once I'm up like 6% or 10%. And then I use that increase in P&L as a bigger dip buy fund. So basically every time I buy a dip, then I will sell that eventually. That then sold position should be a little bit bigger than previously, and that should give me a bigger dip buy fund for the next time. Again, this seems wrong. Keep fucking me here. What's going on? Can't seem to get this math to be correct here yet. I'll see if I can just change it in the stop loss size. Okay, and then cool. Well, it's not TradingView that charges you commissions, right? It's the CME data exchange, right? It's the cost to execute a futures trade. Okay, better. So at least that says range size. That's a little bit maybe more consistent. So I'll see if I can fix that at some point. Okay, right. So range size, that should be a better indicator, maybe, or maybe a better reflection of what I'm trying to represent with that. And then let's change this. Make that red as hell. And then again, guys, right? I don't think we've missed out on anything here yet so far this morning, right? We've identified the standard that we needed to see to be established, and we didn't really get that volume, right? So what does that tell us? Well, it tells us the market is waiting to digest some sort of news, and we can quite logically deduce that that's going to be, right, tomorrow's FOMC. Guys, any of any questions you guys want to go over? Any concepts you want to understand? So I'm not getting any trading action here, so happy to answer any questions. Well, I mean, I don't think those time frames are going to change here too significantly, right? To a very, or for most assets, you pretty much have 23 or 22 and a half hour trading anyway, right? So like you can trade the pre-market, you can trade the post-market, you can trade futures almost nonstop. You just can't trade on weekends. The only thing that would change I don't know, the consistent amount of volume or volatility or anything along those lines is if banks and funds and pension funds and all that kind of stuff started changing their work hours, right? You basically need those participants to radically change their work dynamics to see like a shift in how those periods move, right? I would be pretty surprised if we saw more volume now showing up, or I'd be very surprised to see like the opening flurry to move away from being 9:30 in the a.m. I would be very, very surprised by that. So I would think it would be not really any different at all, to be honest. It's the same type of stuff for when they introduced zero DTE, right, for SPY options, where you could do zero DTE every single day. There was a world, right, where it was like Monday, Wednesday, Friday expirations, I think, right? And so that changed to zero DTE for every day of the week, and people are like, oh my gosh, yeah, it's gonna be such a gambler's market, yada 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 yada. Not really. It doesn't change anything. So I haven't looked at the specific size of the range as like an indication of a high conviction or low conviction correlation. Haven't quite noticed that. What I have seen is that when I see breakouts that occur from the range and the breakout candle is bigger than the range's size, then that tends to struggle. So if I were to go into the opening range here, I've got the style, right? I've got the bullish breakout with volume and range. I've got the bullish and bearish breakouts just on volume. And then I have the bullish and breakouts, right, just on an open and close outside. So all three, right, are essentially different confirmation standards that essentially I applied to be more and more strict as the backtest gave me more and more information. So the way that I currently like it is, to basically make sure that the candle that is breaking out on is not more than the implied opening volatility. And that seems to be the filter that I kind of came up with. Again, right, like it's kind of maybe I'm not quite getting the combo correct here yet, right? Because here, if you get the breakout without volume, you get the break and hold but no volume confirmation, and then you dip buy inside your 4-to-1 risk reward zone, well, you get your 2-hour move here today, right? You get a winning trade. Yeah, spot on, Joe. That's sort of my same. Unless they change when they start their work days, I don't think the timing would change. I don't think you can paper trade in the replay function. At least I've never tried. The replay is relatively limited because it doesn't show you every tick, right? It shows you like 1 in every 1,000 ticks or something like that. So you get like a rough idea of how it moved, but not a perfect idea. Or it's like, yeah. Yeah, spot on, Joe. Probably wouldn't change the amount of liquidity that we see, but it'll just mean that some junior trader doesn't have to stay in the office till 9:30 in the morning, right, on a Eastern time zone. So what I want to stress, guys, right? What has kind of been the theme of the day here is that as a trader, what you're basically deciding is what pros and cons you're willing to live with, right? And which pros and cons you can actually practically live with, right? So for some traders, taking a lot of decisions ends up leading to them burning out and blowing up their accounts. For other traders, right, it's taking a certain size stop, right, that kind of blows them up and kind of destroys their accounts. So it's deciding, okay, within the frameworks of the techniques that we focus on, there's always an aggressive version, a conservative version, and then a version in the middle. I would say that I probably lean more towards the conservative version of things, right? I was raised Catholic, so no wonder I'm conservative. But, certainly doesn't mean that that's the only way to trade. If you then are willing to be a little bit more aggressive, but you still apply those core concepts and you're boxing in your trades, right? You're planning out ideas. You're thinking about things from a reasonable perspective, then you still have enough there to have an edge, right? What I'm doing is I try to build things out from a perspective where I'm basically just avoiding the worst version of myself, right? Like everything I try to do on a day-to-day basis is to avoid that dumbass that shows up when I make bad decisions. If I can avoid that version of my trading, then I don't need to do too much to be profitable. And all things considered, right? I know I haven't had a massive last couple weeks here, right? Not a ton of trades since the 23rd. But I've had, what is this now? 9 trades in the month, and it has been my biggest month of the year. And I don't think that's a coincidence, right? It's just a quality of decisions is always, for me, going to outperform a quantity of decisions. And I constantly have the evidence of that in front of me, right? By tracking my trading, by being specific and deliberate with what I'm looking at, I can reinforce that belief with facts, not feelings. So yeah, it sucks. I haven't had a trade in a week. But you know what? I also have made more money in April than I have in January, February, or March. So take the good with the bad, right? Like those are pros and cons I'm willing to live with. Like I feel less entertained, but I feel more profitable. Okay, sweet. That's a good deal, right? I can live with that. I'm cool with that. So if you want to be successful, you want to feel good about your trading, then create facts, not feelings, and look at your decisions from a bird's eye view, right? Yeah, per account, yeah. And guys, I'm 100% like, I want to trade just as much as you guys, right? I am desperate for one, right? Like, you can hear the agitation. It feels like a waste of time, right? To sit here and not get action. But the market doesn't care how long it's been since my last A+ setup. It doesn't care how long it's been since I've gotten a win. It doesn't care how long it's been since I've been rewarded for a full-size play. Right? The reality is that the distribution of results is always going to be random, and it's never going to feel as smooth as we want it to feel, right? So again, focus on the pro framework. Plan out your trades, review your data, and optimize to kind of fulfill the techniques or the amount of decisions that you want to take. If you want to trade every day, awesome, go for it. I'm not going to tell you no, right? But I will tell you that you still need to focus on those techniques, right? Those are the fundamentals. How you then want to interpret those fundamentals is up to you. But we got to learn those basics first and turn it into basically a math equation. The more we can do that, the better we can go. And I really don't think that there's been a trade here in the last week that I should have taken that was an A+ look, that was just whatever, or however you want to describe it. So constantly, guys, right? Just focus on the variables we can control. All right. I know it's frustrating to not get as much action as you want, to not see as much enthusiasm as you want, whatever it might be, right? But I can guarantee you that you will feel a lot more frustrated about your trading when you're losing money when you don't have to be, right? So this frustration of sitting on hands and avoiding trades and basically feeling like I am being robbed of my opportunity to do my job is a much better feeling than taking trades that I know are compromises that then stop me out or drain my mental capital. And then I'm sitting here dealing with 6% of drawdown, all because I didn't have the discipline to basically not do something, right? My ego was telling me I needed to feel fulfilled, and I was willing to reward that feeling more than anything else. And so that feels much worse than the numbness of sitting on hands, right? And it sucks. Because, man, first 2 weeks of April, first 3 weeks of April were incredible. Right? Getting 3 good trades a week, getting good follow through on all of them. But then also, let's look at the last 7 days worth of price action and how many dojis we've seen inside that period, right? So we also haven't then seen trending price action step back in. So we're torturing ourselves with discipline, but we're making it easy for our portfolios to remain near or at all-time highs, right? I think a big mindset shift that occurred for me here as a trader was obsessing over always keeping my portfolio from being 1 or 2 trades away from all-time highs, right? So if my risk management is good, and if I'm losing in control, or I'm just avoiding all my obvious mistakes. Each new trade I take should be pretty close towards all-time highs or new all-time highs in how much money I've ever made, right? It should be a new net addition to that number. And I want to make that as easy as possible, right? Like, that's a good feeling. If you're constantly making all-time highs every time, or 7 out of 10 times you place a trade, life's going to be good, right? You're going to have the things that you want. But if we're spending, you got to take 3 trades to recover back from 3 trades, or we got to take 10 trades to recover from 1 losing trade, then we're going to be doing things the wrong way, right? I would say the one pattern that I'm interested in here, I'm switching topics. I don't know, maybe I'm too ADD this morning, but the one thing that I'm noticing a little bit inside these 1 for 3 days specifically is basically the overreaction flush through that 2R range can often create a nice pullback scenario. Right? A mean reversion setup essentially, where you get trending price action in a non-trend day can give you an opportunity to push back towards your relative areas. So always, guys, right? Obsess over the variables we can't control. Right? Focus on our risk management. Focus on decisions that don't drain your mental capital or drain it less than your other decision. Because for sure, right, it would be naive of me to say that sitting on hands for a week, right, and waiting for an A+ setup is not mentally draining. Of course it is. Right? Trading is the only job in the world where you can be doing absolutely nothing and still be exhausted at the end of the day. Right? It's the only job in the world where it's like that. So that's okay. That's fine, right? That's a quirk of the game, right? Not a bug. So if I know this to be true, that's okay. I'm willing to be vulnerable about that, right? Honest about that. Not the end of the world. And okay, I'm seeing an obvious mistake avoided, right? I'm seeing reasons to be proud of myself for not wasting my money chasing something suboptimal. Beautiful. So always, guys, right? That's the obsession. How can I avoid getting in my own way so that I can avoid obvious mistakes? Has everyone been able to access the Trade Like a Pro framework? I'm going to keep adding content to that. Hopefully like 1 or 2 videos a day until I feel like there's nothing else I can say there. But please let me know, guys, if there's something that you think is missing. Good man, Michelle. Good man. What was the setup, Michelle? Walk us through it. Way too many contracts, dude. Way too many contracts. Right? You had $2,500 worth of risk there. That's way more than you should have had on. Right? Your max loss number should be your trailing drawdown divided by 5. And then your win, right, is half of your total risk, which is not a very good ratio that is going to be sustainable here long term. So you're buying one contract, Oz? What you're saying? Yeah, you want to be able to survive 5 losing days, right? So we talk about constantly. Right? So you're taking on far too much risk for that decision. And the scale out that you did was at half R. Right? So you're setting yourself up for your math to work against you, not for you. Right? If that trade, the way you're trading, basically you need to win twice to make back one loss. So that's not super sustainable. Right? If you go, Michelle, into the opening range breakout strategy document, it has a handy chart that breaks down or your position sizing should be. Let me see if I can find it here. Right, so it says ES position sizing guide, right? 1 point equals $50. Position sizing calculation, max drawdown or max daily drawdown divided by 5. And then here's like a rough template, right? Over how many stop losses or how many contracts you can buy per account size, per how many points stop you have. Sounds good, man. Yeah, I would say that would be the most important thing to learn in general, right? That risk management side of things has to be perfect. Otherwise, we screw ourselves over. No, just going to be a chop day, right? But we also knew that was going to be a chop day because we knew that we've been choppy on price action since Friday on that volume standard, right? So our thesis here today is that it's chop until we see a breakout on bigger vol than Friday or a breakdown on bigger vol than Friday. That didn't occur, right? So all we have here in the most recent periods is then indecisive price action or choppy price action. And there's no edge there, right? At least not for me. All right, so fake out lower. Now it reverses back towards the midline. Don't chase your guys, right? There's no value in it. Like I would have loved to have chased short. I would have loved to have chased long. But both of those feelings would have absolutely punished me. Not my style, to be honest with you, James. Like, yeah, I don't need the thrill of the gamble. Like, I'd rather just go to the casino. To be honest with you guys, like, I think trading is a lifestyle business, right? Like, you should treat it like a lifestyle business. And what I mean by that is not to, like, use your trading income to buy Lambos and super fancy houses and designer clothes. If that's what you want, cool, go for it. But what trading allows you to do is to leverage decisions, which then allows you to leverage time, right? So I don't feel like I need to spend 80 hours a week working, right, to make an income that is really something that I'm pretty happy with. And so the lifestyle I want to live, right, or the reason I trade for myself instead of trading for a fund is because it allows me freedom to basically do things that I think are enjoyable, right? So it's not to say that every day I'm done at 11 and I never work after 11, because that's not true. But yeah, I'm trading for a certain lifestyle, right? And that's not a financial lifestyle. It's not anything along those lines. It's so that I can own my time and do the things that I want to do, right? Besides trading. And so if I'm then choosing to become like a slave to the screens and needing action 24 hours a day, I'm kind of compromising my biggest why to a certain extent. And then no matter like how much money I make, it doesn't feel very satisfying because I'm not, like, I don't end up doing anything with my time. I don't end up doing anything that I enjoy. Because all I do is spend my time in front of my screens going blind, staring at 30 different charts. And I don't know if that actually gives me the lifestyle that I want. To be honest, like if I wanted that, I could probably go get a job at a fund pretty easily, I think. I don't think they've ever had a candidate apply with 1,000 of their most recent days live streamed trading. Right? So I think I could get a job pretty easy. But I would then be saying no to being able to take a hike with my dog, or to, I mean, today's my dad's birthday, right? So without, like, I would be able to go give him a call in the middle of the day, right? And do all this kind of stuff. And so it's those things that are more valuable to me. And almost optimizing for that lifestyle first, and then trading income second, I think is better. Yeah, you should, Michelle. It's inside the trading docs. What's your... Tagged you in it. So I think, like, the belief that I have to a certain extent is if my end game is to basically be able to own my time, right, be sort of self-sufficient in that way, right, still make an income that I'm happy with, then I know with trading, right, making more money once I have that in place is just about deploying more capital to those decisions, right? So it's not about making more decisions, it's about adding more leverage to them, essentially. And the best way to do that right now is by copying more accounts, right? So if one trade with one account makes me 5K, if I now have 10 accounts, right, I don't need many decisions, or I don't need to spend 40 hours a week obsessing over that to, you know, accomplish XYZ. I don't think that's worth it. So I think it's more about solving for what my why is first, and then building everything else out around that. Because I don't think if I get into the habit of trading 80 hours a week and playing every move outside of hours and like needing to be in the market constantly, that if I then create that freedom objective that I had in mind, that I would then actually start living it, right? Because my habit and my quote unquote addiction would be towards those hours. And so it'd be then really challenging to transition to living the way that I said I wanted to do all those years ago. So the only way to live that lifestyle to a certain extent is to live that lifestyle, right? And then hope that everything else kind of falls into place. And yeah, behave as if you're retired before you're retired, right? Type thing. And then optimize to work around achieving it. Now, maybe that means that I'm gonna get to my numbers a little bit slower, right? Fine. But it also means that, like, I pretty much don't do anything I don't want to do. Like, pretty much never. And so that's worth it, right? Oh, hell yeah, Arya. I hear ya. It was snowing for me this time last week, too. I hear ya. but I think like our why as traders, I don't think a sustainable why is a financial one or like a specific financial one. Because you always push those goalposts, right? Like no matter what, you always push those goalposts. Yeah, great question, SSB. So there's a couple factors for it. So for full transparency, I started this during the pandemic, and I started this during lockdowns. And Quebec was very restrictive with their lockdowns. It was honestly very lonely, and yeah, like trading already is a relatively lonely career. And yeah, during the lockdown period, I felt like I missed the trading desk a lot. I missed that kind of vibe a lot. I really missed it, to be honest. And so got on Twitter, got on social media, and I was a little bit appalled by the quality of information that was available to people, what people were being kind of marketed, all that kind of stuff. It felt really gross. And so I started sharing some ideas on Twitter, and someone asked me if I would live stream my trading. And so I said yes. And for like the first week, it was basically just me and one person inside a live stream as I was figuring things out. And then, yeah, a few more people started joining up, and it kind of grew from there. At that point, my goal was to basically keep doing it until the pandemic ended or until things got back to normal, etc. And so for the next 6 months or so, that was the objective. I kept kind of behaving that way, all that kind of stuff. And what I started to realize to a certain extent was that running the live stream and having people kind of knowing what I'm trying to do and like teaching to a certain extent, it created a level of accountability for me that I found to be a very positive or a big net positive for my trading. So it almost helped me to look at planning out my trades, studying my game film, making my ideas more consistent. It was almost like I was getting paid to do that homework. So what I realized, right, was then that trading and streaming my trading and being an educator was a form of leverage for my time. So if as a trader, right, we just spent the last 10 minutes talking about how we get paid for our decisions, not our time. Well, to a certain extent, right, I don't have an hourly wage, but every time one of you guys signs up for my service, right, well, I almost get paid like an hourly rate, right, for working with you guys. Not quite, but it then allows me or gives me that form of leverage, right, to, yeah, continue to grow my trading, right, and to be more aggressive. It would be naive to say as well that it hasn't made it easier for me to make big money. Truth be told, right, for the first, say, or the last 14 months of the pandemic, when I grew from like my account or the family account from like 100K to 1.1, the big reason why I was able to do that, or a reason why that was easier for me to do, was because I had maybe say 5 to 7K a month coming in from the room. And so I could live off of that, right? I didn't have to take payments from my trading income, and I could continue to compound my account, and I could be more aggressive because I knew that worst case scenario, well, I could still pay for food. I could still live the lifestyle that I wanted. I didn't have really any more risks, right? Or I didn't have like any short-term risks. And so that made it a lot easier, right, to kind of sit and wait and kind of compound decisions. And then fundamentally, right, the final element, I think, is just a peace of mind thing where once you're self-employed, you can breathe easier when you know you've got multiple sources of income, right? So I have a rental property, got my trading income, and now I have my business. And all three are a little bit seasonal, right? So I can leverage my trading income by essentially being a business owner operator in that space. And I can smooth out that equity curve in a really positive way while, hopefully still improving and getting better as a trader. And that makes it then easier, right, for me to compound good decisions and to do all those sort of things. So it is just, created a little bit of like a, call it salary security that you would get when you were trading institutionally that maybe you wouldn't get when you are working individually. And like I had a big, I call it a big come to Jesus moment, right? When I was trading for myself, like 6 months into sort of breaking out and trading solo, like I had a pretty big blow up moment where I had given up like all the money that I had made in my first 3 or 4 months trading for myself. I basically gave it all up in like 2 weeks. And once that happened, I took a holiday, and I remember sitting there at this resort all by myself, looking like an absolute weirdo, day drinking way too aggressively at like 9 a.m. And I was thinking, what was different about my trading experience when I worked at a fund versus how I'm trading right now? And the idea was then for me that if I was going to trade again for myself as a retail trader, I basically needed to replicate those same advantages that I had working institutionally so that I wouldn't have those blow up events. So the way that I thought about that, right, was that essentially I had a couple things that I thought were huge perks. So one, the fund took care of my housing. They gave me a car allowance and they set up all my appointments for me. So if like, if I had to go to the dentist or an eye appointment or a doctor, they just did all that stuff for me. So I never had to think about it. So that was a huge advantage. And so that was one thing that I just like sorted out by spending one day every 6 months, basically just booking out all that stuff so I didn't have to think about it. The next advantage is that they had risk managers and basically support staff that were there in place to make sure that I didn't do anything egregious. So egregious would have been like taking on too much risk, oversizing a trade, taking an entry before a predetermined profit target that we had, whatever it might have been, right? Something that was like a rule breaker. And basically I needed to say, okay, I fucking hated those people in the moment, but now I'm big enough to say, okay, every time I got a tap on the shoulder from Andy saying, hey, Michael, you need to take a break, you're not in the right mindset to trade, they probably were actually thinking about what was best for my portfolio long term. And so I need to create a set of protocols around there to basically replace Andy. And so basically it's okay, how can I replace all of those advantages that I thought I had that would make my trading easy, right? And then so the move became to pay off my place, right? Not have to have like a monthly mortgage, right? All this kind of stuff. And just slowly, right, to create those advantages for myself. And then, like Oz is saying, I am actually surprised how much I like doing it. All things considered. Like, I don't really consider myself to be a very extroverted person. I'm relatively introverted. For lack of a better term, like there's a reason I wasn't put on a sales desk. Like I'm kind of my own little weirdo. And yeah, like it allows me to, like I'm surprised how much I like it, right? I am surprised how rewarding I find it. Um, like the way that my heart races when I see like a big payout hit for someone feels the same way like it feels when I see a big win happen for myself. And I didn't expect that to be the case. Yeah, when I first started. And so that is the reason why I keep doing it fundamentally. But for full disclosure, that enjoyment is very much related to me being able to replace or create those advantages that I can have in my trading, right? That makes it enjoyable. If I thought that running this program and running the stream was actually taking away from my trading potential or my P&L potential, then that would be the point at where I stop, right? And that will be the point out at where I stop running this program, where it gets to the point where it's either like too much of a burden, because that can be challenging, right? Or if like the time commitment becomes too much, like the one-on-ones become overwhelming. But yeah, honestly, guys, right now I love it. It's fun. And the other element that is a big motivating factor for me, SSB. This is a little bit on the back burner right now versus where it was in, say, like January. But running a business where I deal with mostly Americans and trade American markets, etc., gives me an avenue to leave Canada. It creates a business that I can move it, or a business that I can move to America eventually and hopefully live somewhere with a slightly more preferential climate. So again, right, like I'm kind of trying to optimize for the lifestyle that I want. Like I'm just like you, I can't stand snow in April. I want to be hiking or on the golf course or at the beach in February and January. I don't want to be dealing with snow. And that's much easier to do when you run a business as a Canadian than is if I was just trading individually. So there's a lot of perks that way, right? But yeah, guys, like the room is it can make me some pretty decent money. I'm not gonna hide from that. You guys all know what you paid to sign up, right? So it would be disingenuous to say that. But it's also less than what I'd be making if I was working at a fund still. But I get the freedom and I get the security to a certain extent. So it's a huge pro, right? I can de-risk a little bit and I feel like I get better. I feel like I'm providing value and I get a social element that I dearly missed. So all things considered, it's mostly just upside. And okay, yeah, there's times where I hate it, right? But there were times where I hated my day job too, right? Times where I hated working for a fund. Yeah, James, I'm really desperate to leave. Really desperate to leave. And I think with the prop element, right, and getting the leverage and getting the funding, the risk and lose everything fear is not really there anymore, right? Or it's not really as accessible, because worst case scenario, if I lose all my funded accounts, oh dude, it's the fucking worst. Yeah, I can't stand it. Worst case scenario, if I blow all my accounts, okay, I'm losing like $2,000 maybe, right? Maybe a bit more. Oh yeah, I mean I don't. Oh, I mean it's not even the capital gains; it's all the taxes are expensive. Like I pay more than 50%. It's fucking ridiculous. But yeah, like I always think about this, right? What's the Oh, 100%. Look, the Canada that I left when I was 18 was very different than the Canada I returned to when I was 26. Very different. And it has felt like it has only gotten worse since. So if anyone has any ways of helping me get to the States, send me a message. If you got any brides who want to do a green card marriage. Yeah, that's the dream, Robert. I'm 100% with you. It's the fastest way to, for lack of a better term, if you read a lot of autobiographies about entrepreneurs who ended up doing very well in life, say what you want about their political aspirations or whatever, who they are politically, but like one of the reasons why Trump has been able to accumulate so much, we'll call it wealth, it's because they did a good job paying limited taxes, right? Taxes are your biggest expense as a business owner, as a self-employed individual. And so optimizing for taxes over the course of 10 years can make a huge difference in your bottom line, right? Saving 20% a year over the course of 10 years could be the difference between 10 million and 50 million, right? So that's a huge number. Oh, fuck him. Yeah, let's take a look at Microsoft. So 2 out of 3 without volume. You got bigger volume on the 5-min than previous close, and bigger than anything else you've seen. Bigger than yesterday's close. At least it's that increasing volume standard. Breakdown through low of day, under 400. Target-wise, you're probably looking at a 395 ever, or that kind of range, right? 396 maybe would be your zone. But I would say relative-wise, right? Once you're now in this lower part of the Bollinger Band, we're relatively expanded. I think the better scenario in general would be to look for a dip buy in this like low 390 range. Your risk reward is a little bit more proportionate there, right? Where those expanded Bollinger Bands in the lower third of that daily BB band tells you that the kind of expansion event has already happened. And so your downside potential here is probably in this 388 area. And so if I were to box in this trade, right, from that midline to say that profit target, then you're really struggling to get a good like big picture risk reward over where this thing is going to move. So if you were a little bit higher up in the 410 range, easier argument, which is why I think if you get a pullback, right, low 390s, then all of a sudden, right, if your entry is here, your risk reward is, as like a big picture, way greater, right? It's like 5-to-1. Here, it's kind of like 1-to-1. So I would say just from like a daily time frame, the math syncs up better on those lows. Guys, any other questions here? Any other questions you guys want to go over? Trying to get a little bit of a breakdown. Yeah, so the volume standard we needed to see on a breakout over was on bigger volume than Friday's open. So this is Friday's open. We didn't get bigger than that. We're about 4/5 of the way up, so about 80% of that volume standard. So if I know that tomorrow is FOMC and I haven't seen increasing momentum inside this range, then the argument here is that we're consolidating inside this flag pattern, waiting for some sort of catalyst to trigger us outside of that range. So without a base of trending PA, I need to see that momentum show back up prior to being aggressive. If I don't get that momentum, or if I don't get that volume standard, then the basic path that the market wants to move is a little bit random. And yeah, it's just not going to be an A+ look. So it's, yeah, breakout through the range, close and hold outside, and then pull back into the range for an entry. Right? And I want either the breakout candle or the break, close, and hold candle to be on increasing volume. So you could say here, right, setup, confirmation, and then if, right, you got to pull back here into 51.27 before it made this 2R move, then you could look for an entry. Again, setup on increasing volume, break, close, and hold on outlier volume. Then you'd want to see a pullback right into your range and go. So once this candle has happened, this candle that we're currently on did not pull back into 51.28, Chumma, no. Right? Setup, confirmation, breakdown before it pulls back. Right? So it's a 2-candle pattern, guys. Remember, right? 2-candle pattern. So you need a breakout through the range, and you need a breakout or an open and close outside of the range, right? It's a 2-candle pattern. So it's only after you've gotten that break, close, and hold that you can look for a pullback back into the zone. Right? So you want to imagine that this volume was on increasing volume. So let's pretend Okay, volume looked like this. Right on that second candle here. Right, so volume looked like this. Way above average, right? Way bigger than what we wanted to see. High volume conviction. And then you want to see a weak pullback. So here, okay, break, close, and hold on decreasing volume compared to our confirmation candle, which is on this volume standard, right? So it looks like this. Third candle. It's not giving me a very good way to do it. So it looks like this. Then it's a low vol pullback, right? And then you can look for an entry or a retest of this zone. All right, so high vol breakout, low vol pullback, and go. Setup candle, right, that occurs on volume. Confirmation, open outside, close outside the range, right? So we see that that area is respected. And then a low vol pullback in. Now, obviously, this volume is Fugazi, right? That's just a box I drew. It's not real. So we always want to see that combo, right? If this candle was on increasing volume, in theory, and as long as it's still held, you could still look in. But you'd want to think that you can get the high vol breakout, break, close, and hold outside of the range, and then a low vol pullback back into the range. Does that make sense? So no, that did not occur on the 5-min. Well, yeah, of course, SSB, right? Like, we talk about guys having a conservative version of the setup, right? An aggressive version of the setup and a medium version of the setup. It's kind of what we've been talking about all morning, right? So here inside the opening range, there are 3 different types of setup triggers that you can look to go after, right? There's the bullish breakout with volume and range. There's the bearish breakout and bullish breakout with volume. And then there's the pure bullish and bearish breakout. So the idea, right, is that you can pick and choose or filter out which one you want and to solve for that version. But none of these, like, there's not really a difference in how one works over the other. They're pretty similar, but there's pros and cons to each one, right? So on the pro here, all right, like, I catch this trade when I'm choosing the most aggressive version of this setup trigger, and I'm looking to get in, right? Okay, then I probably get that 3-to-1 risk reward, right, at that high of my confirmation candle, and I make money on that trade. But I choose the conservative version of the setup trigger, right? So I wait for the high vol breakout, I wait for that confirmation, and then I wait for that pullback, because the pro for me there is that when I'm wrong, I lose a lot less, and when I'm right, I make a lot more. So it means that I'm for fuck's sake, guys, I'm done for the day. I'm not dealing with this anymore.